You bet, man. Thanks. I appreciate it. Everybody got me loud and clear and can see my screen. Just give me a quick vertical head nod if you can see all that stuff. Awesome. You bet. Good morning, folks. I'm actually coming to you from the options trading capital of the world. I'm in downtown Chicago right now. I'm based in South Florida. Going to be hopping on an airplane here pretty soon, but I want to thank Winvesting for giving me the opportunity to speak, because it is a incredible time in the market. Futures are kind of flat right now. We're going to talk about fading or selling this Trump rally, and it's coming from a guy, one of the only folks in the financial industry besides Jeffrey Gundlach from Double Line Capital and a couple other hedge fund managers who nailed and predicted a Trump election and a market rally. If you remember the whole fall, folks, what was going on? The media was saying what? Hillary's going to win, running away, and if Trump wins, the market implodes. They were wrong. We were right. And now I'm going to tell you why it's time to sell this guy. Because it's going to get awful. I'm going to give you a quick intro to who I am, who Top Gun Options is, our performance year to date, our trading and training methodology. If you're here today for education, you might as well leave. Trading is a skill. You're trained. Fighter pilots are trained. Doctors are trained. Plumbers are trained. The world, if I could steal half a Calvin Coolidge quote, the world's full of educated derelicts. Period. Take a look at our current educational institutions, folks, and run your safe space so you don't melt snowflake, right? I'm going to train you. Our training methodology, I'm going to give you a 7-step proprietary trade plan, just like I used over Iraq, I used literally down the street here in the Chicago Board of Trade. And I'm going to talk to you real quick about an acronym I'm using for 2017, not fear 2017. Each one of those letters has a meaning, and I'm trading in each one of those letters. And finally, I'm going to give you an actionable trade on vol before I let you go. You have got to get long volatility now. Write this down. They gave you good heads up to write stuff down. You ready? When vol is cheap, you buy it. When vol is expensive, you sell it. If you can remember that, you're going to be a very, very successful options trader. Literally down the street, as I look out my window at the SIBO, vol has never been this historically low. And it's essentially priced, that peace, love, and understanding is broken out around the world, and nothing bad is going to happen in the next 30 days. If you believe that, I got a bridge to sell you in Brooklyn. Real quick, guys, let me go give you a quick intro to who I am. I'm going to cut out half these slides because I hate slides. I'm a trader. Folks, as Dan said, my name is Matthew Buckley. My call sign's Whiz. My parents did like me, so that's not my God-given name. I flew the Hornet for about 15 years through the U.S. Navy, graduated from the Navy Fighter Weapons School. I was a bad guy at Top Gun. So if you saw the movie, I'm Jester, right, or Viper. I was of the good guys, I was the bad guy, and also flew 44 combat sorties over Iraq. More importantly, literally a couple blocks away, I was the managing director of strategy for PEAK6 Investments. You see those big vertical windows on the CBOT? That's PEAK6. Loved it. Had an absolute blast. One of the largest volatility arbitrage firms in the world with equity options. And I'll talk to you about that. I got to be honest with you. I felt like I was Valentine here in Trading Places. You bet, guys. Thank you for saying that. It was an honor to serve, and I'd do it again today if I could. You know what? I'd do it even more today. The world is an incredibly dangerous place, man, and we're asleep. I'll leave it at that. But I did. I felt like Valentine in Trading Places. You know, this little old retail trader went and more or less ran one of the largest vol arb firms in the world. I also was the founder and CEO of the Options News Network. We shot on the floor of the SIBO and the CBOT, kind of the CNBC for options. We gave mom and pop, folks like yourself, a behind-the-scenes look at what was going on the floor and unusual options activity. Daniel, 2 Marine sons in Iraq. God bless you, Daniel. You're serving as well as a parent of folks in the military. Thank you for your service, Daniel. One of my most important jobs right now is the commanding officer of a squadron of beautiful children. But here's what we're going to do. We're going to get airborne right now. I'm going to tell you a little bit about TGO, give you a checklist, and then we're going to talk about some trades here, because it's nuts. Trust me, if you ever become a member here at TGO, whenever you hear me say this is nuts, stop mentally clubbing in the Bahamas and sit up and pay attention. The market is at record highs. Volume is at record lows, and volatility is at record lows. We're running around in a forest that hasn't seen rain in years with Roman candles. This thing is going to get ugly, and when, not if it gets ugly, it's going to be very, very quick. Talked about today's brief. Let me, real quickly, 2016, we've been around for 7 years, Top Gun Options. Here's our performance in 2016. Blew the doors off of it, ladies and gentlemen. It was my best in my entire career. Why? Because I nailed everything Trump and after Trump, and we'll talk about that, and why I'm going to fade it, and why I've had it with him and the market here. Our PLTB, which I'll show you today, 125% return on risk. These were $100,000 initial model portfolios. This is the weekly options and urgent alert portfolio, 106% return on risk for $1.21. And here's my embarrassing portfolio. This is my embarrassment. You ready? The AR, the accelerated retirement portfolio, only 101% return on risk for $1 even there. The XLF and AIG sucked for me in 2016. So here's what we're going to do. Our methodology. It ain't rocket surgery, folks. I'm going to give you a quick SOT today. Strategic, operational brief, and then we're going to get tactical. What do I mean by this? Many of you, out of the thousands of people that these guys have registered for this event, you're very, very tactical. You guys got up, put on your bunny slippers, taking a drag of coffee, and you're watching a guy who uses a cowbell and an air horn for stock advice. You don't even know what you're doing for lunch, let alone out to January of 2019, for example. You're very, very tactical. Not here at TGO. What we do is we get strategic. I give, in my live trade briefs throughout the week, I give a quick 15-minute strategic brief about what's going on around the world. What's going on? Saudi Arabia, folks, gave Qatar a 24-hour ultimatum. We might see a war in the Persian Gulf. You guys care about that? Of course you do. When oil goes up to 150, 200 bucks in the blink of an eye, you're definitely going to care. What's going on in Europe? What's Mario Draghi have to say? How about Bank of Japan Governor Kuroda? How about Putin? All of these issues you have to know about because they do impact our portfolio. Then after I give you a strategic brief, about a 15-minute operational brief. What's going on in the United States? What's Janet Yellen have to say? What's the Fed doing with interest rate? How are earnings looking? Durable goods, the unemployment numbers, you name it. We peel back the onion and then we get operational. And then after about a 30-minute strategic and operational brief, you ready? Now we can get tactical. We can trade. Many of you do the exact opposite. You don't know what's going on with Janet. You don't know about the unemployment numbers. You don't know that the macroeconomic data are awful right now, and you don't even know what's going on in the Gulf. I do. Think of yourself when you join TGO as an admiral or a general, sitting there with your cigar in your mouth, and this lieutenant's going to give you a brief, and you're going to have total SA, situational awareness, okay? Do me a favor and take a screenshot of this picture. I think there's a little camera-looking icon. You might have to move your chat box over, something like that, but there's a camera icon. I want you to take a screenshot of this. I think it goes to your desktop or My Documents or something. You need this. This is a 7-step trade plan that I give to my members. I don't have the time to go into every single step and blow it out. We'll do that when you become a member, okay? But I'm going to go through this in a couple minutes and come up with a real actionable trade. But a lot of you say, hey, Wiz, I saw the guy at the airport Marriott, really bad cold coffee, but he said I need a trade plan. I asked him for one. He walked off the stage and said, thank you, good night, try the deal. That ain't TGO. Here we go. I'm going to go through it real quick, our trade plan. First of all, folks, you have to determine, before you squeeze the trigger on any real capital, what's your strategic mindset, man? Are you bullish? Are you bearish? Do you think the market's going to be volatile? Or are you neutral? You think we're going to chop sideways? You have to have your strategic mindset. And let me take a quick survey because this will be interesting. Got a lot of people in the room right now. Here's your first audience participation question. Give me your strategic mindset right now. It's either bullish, bearish, volatile, or neutral. Go. And I just want to get a sense to see where you guys are. So let me open this chat box here real quick. Bullish. Bullish, Claude, Azar, Dan's volatile. Kai's a TGO member. He's neutral. Bullish, bearish, Robert, Barry, Larry. Cautiously bullish, waiting for a bear crash. David, very interesting there. Steve's bearish. Rebecca, neutral. Isn't this awesome, folks? With as many people bullish, Mike. Bearish, Michael. All right, guys. I'm reading these literally as they come in. Look at all of you. We could all be in a room right now and we'd have hundreds of different opinions. I'm going to tell you what mine is in a couple seconds. But here's the beauty about being an options trader. I don't care. Okay? and not being rude, I don't care, folks. As an options trader, we can make money. It doesn't matter if the market's going up, down, or sideways. We can potentially make money in any market condition. Right now, my strategic mindset, whoever said it, you nailed it, is cautiously bullish. The cautiously part, I'm going to give you a trade here in a couple minutes to take care of the cautiously part. The bullish, you can become a member and see all of our trades, okay? Bjorn, absolutely. Bjorn says, I trade what I see. Great point, folks. You trade the market you have, not the market you want. Meaning, I think this market should be half of what it is, folks. I'll be honest with you. The macroeconomic data suck. Where's the market? It just keeps grinding higher, Wiz. So do not step in front of a train, guys. You might think or feel or want the market to roll over. If it ain't, don't fight it. Step 2 in my trade plan, folks, is to identify the target. This is the stock, the ETF, the index that you're going to trade. Strategic mindset, cautiously bullish. Today, the target I've identified for you all is VXX. Now, I'm not going to get into a 90-minute discussion about why to trade VXX instead of VIX. Okay, real quick, literally down the street. You're trading, if you trade VIX, first of all, you're not trading volatility or the spot VIX. You're trading futures on the S&P 500 30 days out, puts and calls. Okay, so we'll leave it at that. Come to TGO, I'll teach you all about volatility. But that's going to be my target today is VXX. Now, step 3 is the most important part of this trade plan. What are your commit criteria? What do I mean by that? If I bump into you on the street and you say, hey, Wiz, I'm in a VXX trade, and I say, why? You need to hit me immediately with 3 to 5 sentences of why you're in that trade. For those of you who have ever been in sales, it's your elevator pitch. If you can't rattle off immediately 3 to 5 sentences of why you're committing capital to this trade, why are you in it? I bump into people. Oh, Wiz, I'm a trader. Okay, great. I have an Apple trade on. Why? I have an iPhone. That's stupid. Why else? Nope. Folks, if you can't look at your portfolio this morning and go, I'm in this trade because of these reasons, you're doing it wrong. And you ready for this? If at any point during the life of a trade, those commit criteria change, get out. Look at the top left of my slide. Discipline, risk management, and superior execution. A lot of you, if a trade goes against you, do what? Apple's going to come back. Apple doesn't hate me. It's got to come back. Apple doesn't care who you are, folks. It'll steamroll over you and your house. They don't care. Apple doesn't get. Stop. If at any time during the life of the trade, those 5 sentences that you hit me between the eyes with change, get out or adjust it, right? Today, my commit criteria. The reason I'm looking at getting long volatility is in the next 3 to 4 weeks, something is going to happen to freak the market out and volatility is going to spike. Volatility can spike 20, 30, 40% in a minute, in a matter of minutes, and I am going to be long volatility when, not if that happens. What was that, folks? 3 sentences, 4 sentences? If you can't rattle off one of those for every one of your trades, you're trading wrong. Step 4. What's the tactic we're going to employ? If you learn nothing from me this morning, first of all, I failed. Second of all, you are going to learn that there is no such thing as an option strategy. Oh, all right, Wiz, you had me, but now you lost me. No, folks, a strategy is high level. It's 50,000 feet. It's a strategy is I want to save for college, Wiz. I want to save for retirement. I want to buy a boat in 6 months. I want to manage risk. I want short-term income generation. Those are strategies, folks. A tactic. The tactic I'm going to show you today supports a strategy. Don't get those wrong, folks. Everybody understand that? Options tactics. I'm going to select a tactic today that's called a bullish double vertical. Write that down. Bullish double vertical. That's the tactic. Tactical employment. Step 5, now I'm going to go through how I lay on a bullish double vertical in a couple minutes, okay? Here's the legs. I'm buying these puts, selling these puts, buying these calls, selling these calls. I'm going to lay out how we employ this tactic. And step 6, folks, I never, ever dropped a bomb in anger or squeezed a trigger on any real capital in any trade and closed my eyes and said, oh my God, I hope that bomb hits where it's supposed to. How many of you do that when you trade? You press fire on a trade and close your eyes and go, oh man, I hope that turns out all right. That's awful. We have to give our trade mid-course guidance. Before we squeeze the trigger on any trade, I'm going to sit here and go, here's what I'm going to do if this thing goes off path, if it starts going against me or going with me. So when those things happen, I'm ready to go. Just like step 7 here, good segue, Wiz, thank you. We need to, before we get in any trade, we need to know when we're going to get out of it for max profit or minimum loss. So when we hit it, we get out. The bottom of the ocean and sides of mountains or a mile short of runways, folks, are littered with the bodies of Marine and naval aviators who did what? They flew past their exit point, man. Those things are written in blood for a reason. Don't do it. Okay, there's my trade plan. Real quick, I'm going to blow through this acronym. Become a member. Give me a 2-week test flight at TGO to see how we do, and I'll tell you how to do that in a little bit. But here's the acronym you need to write down. Not fear 2017. Well, am I not supposed to fear? No, folks, that's the way the letters work out. So that's the way that I remember it. The N in not fear stands for this. Folks, there is going to be war on the Korean Peninsula. How do you know? I know it. Do you think Kareem, some young guy, is going to back down? Do you think Trump is going to back down? The answer to both of those is no. So how does this end? I personally think it's going to end with a couple SEAL teams killing the guy and some surgical cruise missile strikes. We're about to have 3 carrier battle groups. I've been in a carrier battle group. I've landed on a carrier nearly 400 times. North Korea, folks. Remember this Wizism from today. The market only cares when it cares. The market does not care right now about North Korea, does it? When you wake up tomorrow, potentially, and the futures are down 1,000 points, because something went bump in the night, there's 15,000 North Korean artillery pieces pointed at Seoul, Korea. If somebody sneezes, there are 4 million people that will be dead. I'm not here to scare you this morning. Actually, I am, because I want you to hedge. You can keep bidding this market higher, but you need this volatility trade, I'm going to tell you. How is this going to end? If you think it ends by this guy giving up his nukes, folks, he's not stupid. He's seen Saddam Hussein at the end of a noose. He saw Gaddafi at the end of a bayonet, if you saw that video. That ain't going to happen to him. The man's a lunatic. Trump might be a lunatic. The jury's out on that. What's going to happen here? The O in not fear is what? Oil. Let me get that in a second, though. I put these out of order. The T is what? Is Trump. Everybody got it wrong, folks, except me, Jeffrey Gunlock, and 2 other hedge fund managers. I was one of the only, literally in one, you can count on one hand the number of pros who got this right. I did. The entire fall, I speak, folks. I do motivational speaking. I give keynotes about flying Hornets and business and stuff like that. Guess what? I was around in the fall talking to humans. Who answers the phone at 10 o'clock at night to talk to a pollster? A loser and somebody who's unemployed. They're not the same. They're mutually exclusive. Don't get me wrong. My point being, the polls were lies. I knew it. I talked to people who would whisper to me like, I'm voting for Trump, like they were going to get hit in the head with a shovel if somebody heard them. I knew we were being lied to. Goldman Sachs, Citi put out a report a day or 2 before the election that said Hillary wins running away, and God forbid Trump wins, the market will implode 10%. In my live trade brief, I said that's a lie. Not only is he going to win, the market's going to rally 10%. Who got it right, folks? You want to invest with Goldman Sachs or Citi, or you want to invest with a guy who knows what he's doing? The T is also terror, folks, unfortunately. The Manchester attacks, another attack last night outside of Notre Dame, a guy with a hammer. This is, and I get the whole, let's keep a stiff upper lip and show these people that we won't bow to terror. That's great. You know what that tells terrorists? Then we need to do something bigger to get their attention. It's coming, folks. It's going to be biological or chemical, the big one. If you're not hedged, and if I'm not scaring the hell out of you, if you're not begging to get a volatility trade on right now, I'm not doing my job. Oh, oil. Literally, folks, there might be in the next week a war in the Persian Gulf. Saudi Arabia just delivered an ultimatum to Qatar. Does everybody know what's going on in the Gulf? They kicked Qatar. That's what we called it. I've been to all these countries, folks, by the way. They kicked him out of the Gulf states for paying $1 billion in ransom to Iran. This is going to get worse before it gets better. You think oil's stable right here around 50 bucks? Guess what happens with war in the Middle East? The F in not fear is the Fed. Janet, with everything that's going on, folks, and that horrible unemployment number, I agree with Goldman Sachs. They pushed back from a September rate increase to a December. I think we get one more rate increase before the end of the year. And why do we care about the Fed? Our financial positions. I'm long JP Morgan, which I'll show you. I'm long Goldman Sachs. You need to be long the financial stocks right now. They had a rip your face off rally after the election. One of my several of my members, I did 5 contracts on a Goldman Sachs trade. They did 20. One of my members was up $150,000 with 20 contracts on one Goldman Sachs trade on risk of about, I think it was about $5,000. Obviously, they've given a little bit of that back, but they're going to get airborne again, folks, and it's because of this. Europe, a lot of terrorism, a lot of Brexit stuff. Not Brexit, Mario Draghi. We'll talk Europe. Asia, long China. Write this one down, FXI. You got to be long your banker, folks. They own us. They're tied with Japan as being our banker. They're the #1 foreign holder of our debt. If you're not bullish on your banker, why are you banking with them? And finally, the R in not fear is this guy, Russia. Whoa. Hold on, Wiz. Former naval aviator, naval officer. You were trained to potentially kill this guy when the Cold War was going on. You're bullish on Russia? Yeah, I am. Now, I'm going to tell you, before we look at my trading platform and we get airborne and put a trade, I wear 2 suits at Top Gun Options, figuratively. I wear a flight suit, right? I'm going to tell you how I feel about something, and this makes my skin crawl. Me being bullish on Russia, I can't stand it. It's gross. Literally, he was a KGB colonel. I was a Hornet pilot. If we met in a dark alley, I guarantee I'd walk out. But I also, and again, figuratively, I wear a $6,000 Armani suit. I wouldn't spend $600 on a suit. But anyway, here's what I'm getting at. You have to be a little Gordon Gekko-ish, meaning this is a hold your nose trade. Yeah, I'm bullish on Russia. You have to be bullish on a guy who does whatever the hell he wants. And the world doesn't care. If you're not bullish on that, Russia isn't a member of OPEC, obviously. He's going to do whatever the hell he wants to do with oil. He's going to do whatever he wants to do with Crimea and with Ukraine. He's going to do whatever the hell he wants to do. You have got to be bullish on the RSX, okay? And I'll leave it at that. Trust me, if you're sitting there going bullish on Russia, I feel the same way. But my job right now, speaking to you, is a portfolio manager at TGO. You want to have a beer here in the Loop in Chicago? I'll tell you how I feel about Russia, and it makes my skin crawl. However, making money is my primary mission objective, okay? All right, good. Let me check my time and my flight schedule, and we are on time and on target. Okay, good. So here's what we're going to do. Yes, this is, whoever asked, this isn't my trading cockpit. That's my cockpit of the Hornet. That's what it looks like at the business end of the F-18. So let's go ahead and get airborne and do a quick strategic brief, quick operational brief, and then I'm going to get tactical and show you a trade, a bullish double vertical on VXX. Okay. Please advise this person to focus on topic. I can't say your first name because it's HKP Panda. Hey man, this is the topic. Okay. If you definitely will not fit in as a member of TGO, so maybe you should just wait to the next presenter. All right, guys, here we go. Saudi Arabia, UAE, Bahrain, and Egypt all cut ties with Qatar. This is a big deal, folks. This just came out a couple hours ago. Saudi Arabia gives Qatar 24-hour ultimatum as analysts warn of military confrontation. You are doing great. Thanks. I appreciate the kind words. I just wanted to give that guy a heads up. He's a tactical trader, guys. The guy who's like, where's the trade? Stay on topic. You're not going to fit in at TGO. Stand by for one of the better speakers, because this is how I trade. And with triple-digit returns, man, if you can do better than that, send me your resume. But, folks, Saudi Arabia, man, there might be a military confrontation in the Gulf. And remember, if you're watching Jim Cramer right now on CNBC, the market only cares when it cares. If something goes bump in the Gulf, it'll be breaking news. The Dow will be down 300 points. The VIX will be up to 15. You'll know about this. You'll be ready for this because you have your VXX trade on, okay? So the Gulf is not looking good right now. They, you guys saw the president overseas. He did $100 billion military deal with Saudi Arabia. We are arming the left side of the Gulf. The right side of the Gulf, Iran, is being armed by Russia. How do you think this is going to end? Do you think this is going to end well either? And Iran right now, folks, they're being very, very quiet. You know why? Because they're watching what's going to happen with North Korea. You have got to care about these issues, guys, because the market only cares when it cares, and the VIX will be up through you're going to step away and do a quick Starbucks run, and that's going to happen. Okay, so for the guy who just wants to trade, whatever, I'll ignore it. So here's the other reason to look at oil here. U.S. oil exports double, reshaping vast global markets. Okay, we are up to 1 million barrels a day. So this might put some downward pressure on crude. But when you see things like this, guys, you got to wonder if something does go bump in the night, what's going to happen? Now, if you're really intelligent, you're kind of seeing where I'm going. I'm giving you a strategic brief. We'll get operational. We'll talk about the U.S. here in a couple seconds. You can already see that I'm setting up the VXX, and I'll explain whoever just asked that, what being long volatility means. Real quick, I'll get a little tactical. This is the VIX, okay? The resting heart rate of the VIX for the longest time has been around an 11. What do I mean by resting heart rate? The VIX, volatility, folks, it reverts to its mean. When something happens to freak the market out, it spikes. Boom. This is like me on a treadmill, guys. After the market closes today, I'm going to hop on a treadmill and do a 10 incline at 10 miles an hour. Yeah, well, that's awesome, Wiz. Yeah, but I can't do that forever, man. I'll do that for about a minute. And then what happens? I got to get back down. I get back down to my resting heart rate. The VIX for the past couple months, folks, has been around 10. Literally, the long-term mean of the VIX, folks, is a 20. It's not, 20 is not even on here, guys. So as I brief you, strategically and operational, something is going to happen to freak this market the hell out. Look at this, folks. This was the Comey memo. The guy's testifying tomorrow. So here's the Comey memo. Holy crap, Trump's going to be impeached. And then the next day, as smart people like me said, well, the guy's either a liar or he's a liar, because he testified a month ago that nobody's pressured him to ever do anything bad. And the Washington Post reporter never even, quote, saw the memo, and he's using an unnamed source. So volatility went away. We made about $4,000 on our volatility trade right here. So that's where I'm going. So whoever asked what being long volatility means, that's what I'm talking about. Look at this headline, guys. Politics, not terrorism or other stuff, should matter most to the markets. You know, the Brits have a stiff upper lip, right? Keep calm and carry on. Well, it's kind of become cliche. Yeah, it has. But yet the return to normality in London and Manchester shows it's true. I mean, I got to be honest with you, folks. You know, 3 literal pieces of evil jump out of a van and turn people into human Pez dispensers. They cut their throats, folks. What's the market do? It shrugs it off, man. Here's what the market does. It goes up. Look at the 2 biggest pullbacks year to date. Does anybody know what this pullback was right here in the middle of March? Here's your audience, second audience participation question. What was this pullback right here? Go. And it gives me a reason to have a sip of Starbucks, which I hate. I'm boycotting Starbucks, but I'm drinking it. What was this pullback, guys? Give me an answer. Nope. That's exactly right, folks. This was the failure to what? Repeal Obamacare. If you think I'm some sort of dyed-in-the-wool Republican, you're wrong. First of all, I'm a libertarian. This is a national embarrassment. The Republicans, the clown car known as Republicans, what? They voted to repeal Obamacare over 60 times under Obama. Under a Republican president, stupidity. That was a political pullback. What was this pullback, folks? I just told you. This was the Comey memo. So out of the major implosions this year, they've both been political. Okay? So we're setting up for another one. Look at JP Morgan. This was yesterday. JP Morgan lists 5 red flags that point to a 10% correction. Now, again, folks, I emailed JP Morgan and tell them, hey, guys, you got to trade the market you have, not the one you want. But they're right. Either way, I told you I'm cautiously bullish. So the tactic I'm going to show you in a couple minutes is my hedge. If the market rolls over and volatility spikes, I'm going to make money off of it. And that's the trade I'm going to show you, okay? When you see a headline like this is Bank of America. They put this out the other day. Merrill Lynch. Everybody remember the thundering herd? Well, they imploded, right? You know, Bear Stearns, Lehman Brothers, and Merrill Lynch was going to be next, but Bank of America was forced by the government to more or less take Merrill Lynch in. Look at their bulletin the other day. All news is good news. And if you're laughing, I know there's some TGO members on here as well because I invited you guys. We're laughing at this because we the bizarro market headline that I teach my traders was this. Good news is good news. That makes sense, Wiz, okay? Bad news is good news. And awful news is great news. What's that mean? Well, when Ben Bernanke was the Fed chief, or either under Janet Yellen, folks, if we had a bad unemployment or bad macroeconomic data, what did they do? They added, remember QE, folks, quantitative easing, 1 through 4, Operation Twist. They pumped liquidity into this market. Now they're keeping interest rates artificially low. So this headline, folks, all news is good news. When you see a headline like that as an options trader, you know to freak the hell out, or at least be worried. Like I said, this is a hold your nose rally. You might not like it, but you got to trade it. But you have got to have a trade. It's musical chairs, folks. When this music stops, I'm going to make money. I'm making money as this thing, I'm holding my nose, folks. But I'm going to show you how to make money when it rolls over. I'm going to skip that. Talked about the unemployment rate. Sucks. Yeah, the rate falls to a 16-year low. But other than that, Mrs. Lincoln, how was the play? Hiring is awful. And I'm sitting here in a hotel. I'm flying back to Miami here in a little bit today. That's why I got this first slot. But folks, and the reason I bring up why I'm in a hotel is because the hotel staff, the bartender, the busboy, all these people, that's the jobs that we're creating. I don't begrudge any of those people, man. I've held most of those jobs except a maid. But those type of jobs are not going to get us out of this economic Vietnam that we're in right now. Okay, so the Fed is going to keep interest rates low, which is hitting my financial positions. It's not hitting them; they're kind of flat. But it is time to get long the financials. Okay, get out of Apple. Love Apple. We're up what? One of my Apple trades, real quick, folks. I put this in an email to my members today. We're up nearly 16 grand on one Apple trade. Just one trade on Apple. There's been a big sector rotation out of financials into tech, but right now we're going to get long vol. Okay, real quick, folks. That was way fast. In my live trade briefs, it's about 30 minutes. I'll give you a strategic brief about what's going on around the world. Then we'll get operational and talk about what's going on here in the U.S. And then and only then do we get what? Tactical. Everybody, yeah, correct. You bet, man. SOT, strategic, operational. Now I can get tactical and take a look at trades. Right now you're looking at the urgent alert and the weekly options model portfolio. Okay, and I didn't get filled on my weekly options trade for Friday. Every Monday we do a weekly options brief. It was a bull put spread, the 24.20, 24.25 at 95 cents. It's up. The trade's essentially flat to down a little bit. This is by Friday. We more or less could. Let me just take a look at that trade real quick. If the S&P 500 stays above 24.25 by Friday, this trade makes $1,700 in 4.5 days. Isn't that pretty cool? And I have an SOP, folks, standard operating procedure. I don't want to risk more than $5 grand on any one trade. It's a little north of that. I'm okay. I'm the pilot in command. but you have to know your max risk. So here's an example of a weekly options trade that I put out that has a 71% probability of making $1,700 this week. That's not the trade for today, but I just wanted to show you that we do trade weekly options. And here's the performance of our portfolio year to date. 36 grand if you allow me to round up. That's pretty damn good. And I'm only deploying about 55% of my capital. The rest is in notional cash, folks. That's a hell of a return. Look at that. And the SPX, I trade weekly options, guys. SPX, China, Volatility, Apple, Disney, Brazil, Goldman Sachs. The financial ETF sucks. The OIH is the oil services industry. SDS is a bearish trade, and then JP Morgan is a little down. Yeah. So, all right, here we go, guys. Volatility. Volatility reverts to its mean. Okay, meaning, holy crap, James Comey has a memo. The president's going to get impeached. No, Comey either lied under oath or he should have arrested the president or whatever the hell the FBI director would do if he feels that the president is influencing him. Market went back to here. But look, I know looking at the left side of the chart, folks, is like driving around the Indy 500, or Daytona 500, look in the rearview mirror. But look at how volatility works, guys. It spikes on uncertainty. Holy crap, something is freaking us out. Okay, it's gone. So I believe, here's my commit criteria one more time before I show you the trade. Something is going to happen on the right side of this chart to freak the market out in the next 3 to 4 weeks. What is it, Whiz? I don't know, folks. My call sign's Whiz. It ain't Nostradamus. Could it be this? Could it be that? Could it be this? Could it be? I just gave you a brief on what could freak this market out. Now let's employ a tactic in case it does. Vertical head nod if you guys are getting this, right? Everybody understand? And I'm no rocket surgeon, man. I stole this. I borrowed it from the military. We don't give a guy a rifle and airdrop him into the middle of nowhere and go attack. Where? Just go. That's tactic, folks. We give him a strategic brief. Here's what we want to do. Win the war in Iraq. Here's the operational brief. We want to take this town. Here's the tactical brief. You guard this bridge for the next 4 hours so an armor brigade can cross and capture the town and we win the war. Everybody understand that? Good. A lot of vertical head nods. So I'm going to pull up VXX. I told you I could give you a 3-hour lecture on why you cannot trade VIX or should not trade VIX and why you should trade VXX. And part of that 4-hour lecture would also be to do not trade the VXX long term. Look at that. Even a political science major, knuckle dragger like me can figure out, look at, it's called backwardation, contango, and they have to rebalance this thing. Not going to give you a lecture on it. My eyes glaze over when I give a lecture on this. Just know that over time, the VXX will go down. But look what happens when it doesn't. Here's your Comey memo, folks. The VXX went from 13.5 to what? $16. We made $4,000 on that trade. I didn't get filled on the other trade, which was what? I tried to get filled on a bearish double vertical. Because once volatility's, ditch the word volatility for a second. Just substitute uncertainty. Okay? When something, you ready for this Yogi Berraism? When something is known, it's known. What do I mean by that? If something happens to freak the market out, it'll be short term, unless, God forbid, it is war in the Korean Peninsula or something bad. But if it's a short term freak out, guess what happens? The freak out ends and volatility goes back. So technically, when you trade, when you get long vol, like I'm going to show you, you can also, when something happens to freak the market out and your VXX trade is making a hell of a lot of money, get out of it and immediately get bearish because vol is going to come in. I forget what this was. Is this the Obamacare repeal? I forget. Doesn't matter. Holy crap, market's freaked out. Trump can't get tax, the tax law passed or infrastructure bill. No, he probably can. Freak out, come back. So now we're moving, if you're following along on your checklist, now it's time to get to the tactic, a bullish double vertical. I'm going to pull up my options chain. I use Options House. Well, it was Trade Monster. If you know John and Pete Najarian like I do, buddies of mine up here in Chicago, they built Trade Monster. Then Options House bought it, and now E-Trade bought Options House. It's like one of those little Russian dolls, you know, one inside the other, inside the other. But I use Options House. I think it's a great platform. I'm going to hop in my time machine, and I'm going to go out probably to June 30th. Again, I don't want to go out too far because this trade has theta. It decays. I don't want to go too close, even though I could. I mean, hell, something, you know, Trump could send out a tweet in the next 3 minutes and the market implode, or it go up. But I'm gonna pick maybe 3 to 4 weeks out and get bullish on volatility. Now, the trade I'm going to employ is something called a bullish double vertical. All right, Wiz, you lost me. It sounds like you're bearish and you think the market's going to go down. Well, remember, folks, if I'm bearish on the market, I'll most likely have to be bullish on volatility. Does that make sense? I'm overall, I told you my mindset, folks. I'm cautiously bullish. This thing is going to grind higher. And what's going to bring it down? I don't know. One of the things that I briefed you on, or something I just don't know. So bullish on volatility can mean you're semi-bearish on the market. Thank you, Claude. I appreciate it. So here's the tactic. Step 4. It's called a bullish double vertical. Write this down. For everybody should be taking notes. You only do a bullish double vertical if you're really, really, really something. Okay, that was a lot of reallys, Wiz. Yeah. You don't do this if you're, you know what, Wiz, you're right. I'm kind of bullish on vol because I think something might freak us out. Then don't do this trade. This is what I call an afterburner trade. When this thing's printing money, it is printing money straight up, guys. And the converse is true. If it's losing money, it kind of hurts. So you have to really, really, really believe something. Like me, by June 30th, during this time frame here, over the next couple weeks, I believe something is going to happen to freak the market the hell out. That means I'm going to do a bullish double vertical. Now, I'm going to ask all of you a question. I want answers, folks. That sounded like a few good men. You can't handle the truth. If you know what, Wiz, you're right. I do think volatility is going to go up. If you think something is going to go up, let me actually I'll bring up the chart. If you think something is going to go up, what do you also think it's not going to do? Scott already answered it. People already answered before I finished it. If you think something's going to go up, what do you think it's also not going to do? Scott, you got it. You were the first one. Correct, folks. You don't think it's going to go down. I know logic sometimes escapes us. If you think something is going up, you also don't think it's going to go down. So for those of you that are familiar with options, you know if something is, you feel something's going to go up, you can do a bull call spread, right? Yeah, I know what a bull call spread is, Wiz. That's awesome. Well, folks, I think that's ridiculous. If you're going to do a bull call spread, that's called a debit spread. Even saying the word makes my skin crawl. I hate debit. That means money's coming out of my pocket. But if you think something's going to go up and you want to do a bull call spread, why don't you pay for the damn bull call spread by selling a bull put spread? Because remember, folks, a bull put spread means you don't think something's going to go down. That's exactly right, man. I see hundreds of light bulbs starting to turn on. So let's build a trade that mirrors this strategic mindset and our commit criteria. I'm going to click new spread, and Options House calls it a vertical spread. I hate repeating words. It's like when somebody says, I'm going to go to the ATM machine. Wait a minute, you're going to go to the automated teller machine? No, you're not. So I'm going to do a bullish double vertical, and I'll build it right here in front of you. The first thing you should look at immediately is the picture. Okay, the blue line here is VXX. That's volatility. All right, Wiz, now I'm starting to see something with a picture here. Here is a bull put spread saying, you know what, I don't think vol is going to implode. If vol implodes, folks, it's because Jesus, Muhammad, Ganesh, and Buddha came back to life, folks. I mean, literally. How can vol get any lower? Can it? Sure. Will it? I don't think so. So this is the bull put spread, and you know what? Here's the bull call spread. So a bullish double vertical, guys, looking at the picture, is simply two vertical spreads on top of each other with the same strategic mindset. In this case, bullish. So let me just build this the trade here, put some strikes on, and then I will talk to you. I want to see what my risk is. I'll be right back. Let me see how many contracts I can do. Perfect. All right, guys. I strongly recommend you take a screenshot of this. Bruce, why not just buy a call? Bruce, buying a call, man, is like going to the Fort Lauderdale Ferrari dealer and buying a Ferrari in your midlife crisis and peeling out of the parking lot. And I'm the dealer, Bruce. I'm your car dealer. I love that you're having a midlife crisis, Bruce, and you bought that Ferrari for $250 grand. As soon as you peel out of my parking lot and you buy that call, Bruce, what happens to your car? Or people help Bruce out, folks. What happens the second you pull out of your car dealership when you buy something? What impacts it? Hopefully not another car. What impacts it, guys? Somebody help me out. Where's all my options traders? You got it, folks. David, Claude. Exactly, Reg. It goes down. You bet. No, it depreciates. David, you guys got it. It goes down in value, folks. When you buy a call, the second you get filled on buying a call, you're losing money. Well, Whiz, it went up a little bit. I don't care. You're losing money. It's called theta. It's called time decay. So guess what I do since I live in South Florida? Bruce, when I peel out of that parking lot, I have a sugar mama or a sugar daddy, whatever your leaning might be. I have somebody else make some monthly payments on that thing by selling another call, Bruce. So here's what we're going to do. I'm going to sell 125. Whoa, Wiz, where are you getting 125 from? It's based on my risk and my SOP, my standard operating procedure. Give me 2 minutes and I'll tell you why I'm doing 125 contracts. So everybody just hang out. I'm selling the 125 of the June 30th. Okay, Wiz, why June 30? Because I just told you, I think something's going to happen in the next 3 to 4 weeks to freak the market out. I'm going to go out to this date. Okay, that's why June 30th. Of the 13 puts, we're about 40 cents above that, so it's close at the money, but not. Wiz, what if you're wrong, man? What if Jesus, Ganesh, and Buddha all come back to life in the next couple weeks and volatility goes to zero? The VIX is at zero. We're essentially jellyfish, folks. There's nothing bad that can happen. This market's floating around. Can it happen? Sure. Will it? No. It's physically impossible, folks. Just like the human body, we can't live without stress. Lloyd, nope, this is not an iron condor, guys. An iron condor is a range-bound trade. You think something's going to stay in a range. This ain't staying in a range. This is an afterburner trade. I think volatility is going to spike. So nope, this is not an iron condor. This is a bullish double vertical. So here's the bull put spread, guys. I'm selling these puts. This is me saying, you know what, VXX and volatility, I don't think you're going to be below 13 by June 30th. What if you're wrong, Wiz? Well, if I'm wrong, I'm buying these downside 12.5 puts. This is called a bull put spread. Okay, it's also called what? A credit spread. I'm being paid to put this trade on. All right, Wiz. Now, for those of you who just said, why not just buy a call or you know, Wiz, I do a bull call spread. You're right on volatility. Well, here it is. I'm buying the 14 calls and selling the 14.5. This is called a bull call spread. It's also called a debit spread. And you guys, after knowing me for 47 minutes or whatever, you know I hate debit spreads. So look at this down here. This should be the biggest smile that you get today. It's a credit. This trade, folks, you are getting paid to put on. Okay? So this, literally, folks, somebody just came in your room, sat at your kitchen table and said, you know what? I'm gonna pay you. I'm gonna pay your USAA auto, home, and life for the next 4 weeks. Yeah, isn't this awesome? I'm gonna get to it, folks. Claude, it isn't a tight spread. It's 50 cents wide. Claude, if you I'm not going to get into it, guys. You could do a dollar wide and do less contracts. I don't talk contracts or commissions because everybody's different. I guarantee you, out of the thousands of people that registered for this event, we all have different commission rates. So if you think it's a tight spread, Claude, that's Claude. I love you asking that. Shows you're a savvy trader. Then you fly and fight your own airplane. Do a dollar wide. I'm Whiz. You're getting the eavesdrop. You're sitting in the backseat of my Hornet right now, Claude, and I'm showing you how I fly and fight the airplane. What you do on your side of the computer in your bunny slippers is your own business, okay? But very, very good question and good point. Okay, so Susan, I'm about to get to that. How much money are you risking? So, folks, there's your bullish double vertical. I hope everybody grabbed a screenshot of this because I'm going to move on. You ready? Because now it's time to take a look at the metrics. Our mid-course guidance, okay? I'm going to go mid-market on this trade, right about, I don't know, 15 cents. Now, I know you guys didn't want to be this grossed out this early in the morning, but now I'm going to give you a visual. Okay, here we go. In a couple seconds, I'm going to turn into an Irish Catholic nun, okay? And I know that's not a pretty visual, but here's what I'm getting at. When I click this Analyze button, I'm going to turn into Sister Mary Matthew. If you don't look, if your eyes don't go where I tell them to go, I want you to crack yourself on your own knuckles. Okay, so here we go. When I click this Analyze button, I want you to look at one place and one place only. You ready? The sad face. You ready? Everybody, look at the sad face in 3, 2, 1. Sad face. Max potential loss. My max potential loss in this trade is $4,400. All right, Wiz, and I guarantee you, if I didn't force you to look here, everybody would have done what? Looked at this guy first, or gal, max potential profit. Why did I force you to look here first? Because I'm going to make you a hell of an options trader. A fighter pilot, an options trader, always looks at max risk first before we look at max. We always ask, how am I going to get killed? What is my max risk in this trade? And if you ain't cool with this, don't ever look here. And if you ain't cool with potentially losing $4,400, do less contracts. Do 10, do 15, do 1. I don't care. I'm not telling you what to do. I can't. I'm not an RIA. I don't. You're getting the eavesdrop on what I do, okay? So, like I told you, Claude, I will give you info at the end. I love this, Claude. Before you leave, can you give us some info on how we can subscribe to your group? Pelly, do you do this on SDS? Yes. Let me finish this trade, guys. I love it. A lot of motivated people wanting to. I'm going to be doing this in a couple hours, by the way, for my members. But anyway, I told you a little while ago, I have what's called an SOP, Standard Operating Procedures. I don't want to risk more than $5,000 on any one trade. So this is well within my SOP. Now I can look at max potential profit and go, awesome. I could potentially make, if in the next 3 to 4 weeks, something happens to spike vol and the market freaks out, I can make $8,000. Yep. Well, Wiz, using current at the money volatility, these probabilities are kind of low, 28% and 33%. Well, folks, the Options House platform is showing me what? The best case and worst case scenario. Now look at, this is what should really put a smile on your face. Almost a 60% probability of at least breaking even. Look at this dude's face. He's like, I broke even. Isn't that cool? So if you think these probabilities are low, it's because they're showing you the best and worst case. The break even is what should really, really make you smile. So this is a hedge, you guys. If you've heard that, if you watch my morning videos that I do each day, they're free on our YouTube page or whatever. I usually sign off by saying this: happy hunting, and make sure you hedge. So if you've heard any of my videos and you're like, what the hell does that guy mean by hedge? This is one of them. So I'll open the straight. Yes, whoever just asked, I'll show you the legs again. Here it is. Now, putting this trade on, when I place create order, and this gets fired into the market down the street, into the SIBO, this goes in as one trade. It's a double vertical. The market makers recognize this as what? Okay, Wiz is placing a bullish double vertical. If I'm not getting filled, I use the Starbucks rule. And here he goes again, mentioning Starbucks. Here's what I mean by that. I'll place this trade, and if I don't get filled right away, I'll go for a walk. 20-minute walk, go down to Starbucks, talk to people, make them think I'm weird. I'll come back. If about 20, 30, I don't know, an hour later, I'm still not filled on this trade and I'm at mid-market, you know what I'll do? I'll break it up. What do you mean? I'll put on the bull put spread and the bull call spread as separate trades. And sometimes instead of 15 cents, I might even get a better fill by putting these spreads on separately. Which one do you put first? It doesn't matter, man. People always ask me that. Which one? Who cares? Flip a coin. Put the bull call spread on, and then immediately 3 seconds later, put the bull put spread on. Okay? So I will put them on separately. If I mispronounce your name, I apologize. How are the probabilities calculated? Every broker, every options house, E-Trade, Trade Monster, Scottrade, Fidelity, they all have their own black box, their own secret sauce to how they calculate vol. Okay, and if I had a whiteboard and 8 hours, I'd show you how maybe proprietarily options house calculates vol. But this is current at the money volatility, these probabilities. Okay, but everybody, if you're looking at a different platform right now, some of you might be looking at Thinkorswim, and the probabilities might be a little bit differently. Okay, David, please don't forget to explain exactly what you mean by long volatility. I think I did for 45 minutes or 40 minutes, but let me move this chart over. Let me go to VIX. Being long volatility, David, means I believe, here's the VIX, David, the volatility index. It's down 2% right now today. This is saying when you see the VIX down like this, it means people, I'll use the South Florida example, David. This is hurricane insurance right here, okay? Right now, let me move this trade out of the way here. I'll just put it all the way down here. Right now, David, when the VIX is down here at its resting heart rate at 10, it is essentially saying it's beautiful in South Florida. But David, when the Channel 5 news comes on and says there is a tropical depression over Bermuda and it's heading for Miami, what happens to hurricane insurance, man? It goes through the roof. Getting long volatility means you think something is going to happen that's going to freak the market out. You think a hurricane might hit in the next 3 to 4 weeks. Well, Wiz, it's actually my first name's Matthew. Guess what happened in the fall? There was a Hurricane Matthew that was supposed to hit South Florida, and it didn't. What happened after that, David, was hurricane insurance went down and was cheap as hell. Does everybody understand what getting long volatility means? David, did that help? Give me a vertical head nod or a thumbs up. Okay, because maybe I blew past that. But getting long volatility means you think something is good. David, great. Suzanne, awesome. Getting long vol means, Wiz, you did I know it was abbreviated because you're short on time. You gave me a strategic and you gave me an operational brief. You freaked me the hell out a little bit, which is good because then you should be able to come up with your own commit criteria. You know what? That Wiz guy's right. Something is going to happen, I think, to freak the market out between today and June 30th. So I want to be long volatility. Now, real quick, guys, before, and I love all the how do I become a member and stuff questions. Let me finish about the trade, and I'll wrap up with how you guys can give a test flight. David, you bet. Long in anticipation of an imminent spike. Let me talk trade management real quick. Wiz has 125 contracts on. Whoever, I think it was Claude, said, hey, those are tight spreads. If you did dollar-wide spreads, you might only have to do 75 or maybe 50 contracts, right? But let me talk trade management, at least for me, because I'm doing 125 contracts. Let's say, here's what's interesting, guys. You see this Comey memo? I remember this. I told you we made $4,000 on it. I think I still have it on my desktop. What the hell's this trade? Whatever. Men lie, numbers don't. Trust me. We made $4,000 on this trade. But here's what's funny. Well, it's not funny. Tuesday morning in my primary live trade brief, before the Comey memo right here, a lot of my members were like, hey, Wiz, you know, this trade expires Friday. It's down 2-3 grand. What are we doing? I said, I don't care what you do. Here's what I'm doing. Nothing. Well, Wiz, you know, it's down 2 or 3 grand. I said, folks, with my luck, if we adjust this trade or we move it or play with it, something's going to happen between now and Friday that's going to freak the market the hell out. And people are like, oh, okay. Some of my members adjusted it, guys, or closed it. What happened? This was Tuesday morning. What happened Thursday at like 1:30 in the afternoon? The Dow was down 317 points in the blink of an eye. Why? Because of the Comey memo. So listen to me. A lot of these type of hedges, who was it? Ronco? You know, Ron, what's his name? You know, the easy bake oven or whatever, set it and forget it. With these volatility trades, literally in the blink of an eye, the VIX can move 30-40%. So I tend to not manage this type of trade. My other trades in here, sure, Disney, you know, Apple, blah, blah, yeah, I'll manage those. This one, I ain't going to touch. David, can you get long vol with a credit spread? David, I'm pretty sure I answered that, man. This is a credit spread right here. This bull put spread is, let me go back to open up the trade here. David, this is a bull put spread. This is known as a credit spread. But let me go back, David, and I asked you guys kind of a rhetorical question. If you think something's going up, if you think volatility is going to go up, you could do what? A bull call spread. Where's a debit spread? Yeah. But David, if you believe something's going to go up and you do the bull call spread, you also believe it ain't going down. So you do both. That's why this tactic is called a double vertical. And in this case, a bullish double vertical. Now, let me talk real quick about trade management here, guys. When, not if, something happens, folks, the VIX ain't staying at 10 forever. If you believe that, you're nuts. Something is going to happen to cause this. Will it be in the next 3 to 4 weeks? I don't know, man. I could be wrong on this trade. I reserve the right to be completely wrong about this trade. I don't think I am. But guess what, folks? When something happens to freak this market out, as this trade makes money and is profitable, guess what Wiz is thinking? As this thing is freaking out and the VIX is spiking, Wiz is already thinking about what? Getting bearish on volatility. Let me give you an example. I made on 2 trades around the Brexit. With VXX, we made $22,000. 11 grand. It was exactly 11 grand on each trade, guys. I didn't know which way the Brexit was going to go. It was a coin flip. I think I actually said they'd stay, and I ended up being wrong. Haha, you were wrong, Wiz. Yeah, I was, and I made 11 grand. You know why? Because of uncertainty. Does everybody remember that Brexit vote? Everybody remembers that Brexit vote, right? Nobody knew what was going to happen. But guess what? Uncertainty spiked. And then even before the votes were counted, folks, I closed that trade and did what? A bearish double vertical. You know how you do a bearish double vertical, folks? You roll inverted and do the exact opposite of this trade. And I'm going to be honest with you, folks, and I gotta run here in a little bit because I'm going to use an airplane analogy. I'm heading out to O'Hare to fly back to South Florida. My dad, bless his heart, man, I miss him every day. Here's my dad. Hey, Matthew, can you take me to the airport, tomorrow morning at 8? Dad, your flight's at 3. Well, did you get an earlier flight? No, I'm going to sit there. I'm going to read my book. I'll be okay. He said, I'm not important enough. If I'm 1 minute late for that flight, they ain't turning it around. Personally, on a side note, he was that important, and they should have. But here's his point. You have to be early on volatility trades, meaning if you wait to get out of this VXX trade, like, oh, my God, Comey memo, Trump's going to be impeached. If you didn't get out of this trade and sat there like, oh, my God, vol's just going to keep going higher, you would have ended up losing $5,000 in that trade. You would have turned a $4,000 or $5,000 winning trade into a $5,000 loser. You have Soon as this trade starts making money, guys, start thinking about getting out of it and getting bearish on volatility, because like me on the treadmill with a 10 incline and a resting, I got to get back to my resting heart rate. It has to happen. Does everybody understand that? Okay. Susan, in the last 4 months, the VXX has spiked once each month at some time during the month. You got it, Susan. Smart woman. Absolutely. Kai, to that point, I rolled mine and settled for half the gain. Okay for me. Kai's a TGO member. He joined us this morning. Awesome. David, thanks for your patience and efforts to clarify things. Outstanding presentation. Thank you, David. Absolutely, man. This is what I do. Nice segue, David. Nice segue to what I do, because I do, folks. I gotta throw my stuff and hop in a plane and get back down to South Florida. And I appreciate the investing guys let me go first here. This is easy, guys. If you want to be, I could pitch you on, hey, it's this much a year and all that. Here's what I strongly recommend you do. First, do me a favor and just enroll in my daily videos, man. They're free. SitRep. They're called situation reports. Okay, that's a military term, right? Go.topgunoptions.com/sitrep. Every day I do a free daily video. It goes out to my members and it goes out to the world. So this is free, guys. Go to go.topgunoptions.com/sitrep. And I do a daily rant, a daily video, guys. Just your name and your email on this page, okay? That'll get you my my SitRep, my daily SitRep. But for those of you that are skiers, just go to my homepage here and scroll down, and here's our 3 model portfolios that I manage. I think it's like $14, 28, and 38 or something like that for a 2-week test flight. That's all I'm going to pitch you on, guys. I'm not a marketer, man. I know my marketing department is furious when I say this stuff, but I'm not. I'm very passionate about what I do. Hopefully that shows. If you're interested in our accelerated retirement portfolio, go skiing down the beginner slope. If you like the hedges that I just talked about, and you know you like trading the front months, what's the front month? June, July, August. And then out to Jan 19, maybe you do the intermediate ski slope. And then the advanced is the portfolio that I trade weekly options in, okay? Like I showed you, here's the weekly options trade for this week, and it's already looking pretty good. This trade, I didn't get filled on it, but some of my members will make $1,700 this week on one trade. That's the weekly options portfolio, okay? So just go to our homepage, topgunoptions.com, and you can scroll down and take a 2-week test flight. I think it's $14, $28, and 33 or something like that. Okay, so there's the other one. Oh, thanks, Dan, for putting that to everybody. That was stupid. I thought I put that at everybody. Craig, do you have a track record and history on your portfolio? Craig, I just showed you that. I'll go back to the 2016 performance real quick, but you know, why do you care about 2016? How about year to date? I'll show you year to date real quick too. Here's last year, guys. I told you this was the best year ever, because I nailed the Trump election and the Trump rally. And now I'm telling you to hedge and get ready for it to fade. Here's the 2016 performance, guys. A $1.25 performance. Here's the urgent alert and weekly options, 106. And then here's the embarrassment portfolio. The retirement was only up 101%, or these are initial $100,000 model portfolios. Here's the year to date, at least for this one. I'm not going to switch through all my portfolios, guys, because I'm running out of time. Here's the year to date gain in the weekly options and urgent alert portfolio, up about, if you'll allow me to round up, 36 grand. And there's the performance. So there you go. Okay. All right, guys. Literally, and I'm getting the hook here because I got to run. Dan, I got to run early because literally I got to run out to. No, this is for year to date, guys. The slides I just showed you was 2016. If you're looking at my right here, guys, it says year to date. There's the year to date gain. Okay. So before I go, literally, I gotta hop in an Uber here and get out to the airport so I don't miss my flight. Beginner, intermediate, advanced. Just go to topgunoptions.com, take a look at the ski slopes, and you can get access to the type of trades that I showed you today. Even if you don't take a test flight into our squadron here for the next 2 weeks, guys, please hedge. Please do something to hedge, man, because this, like I said, this is a hold your nose rally, guys. And when the music stops, you want a chair. And if you don't know how to grab a chair and potentially make some money and hedge, you need to at least check out our squadron here at Top Gun Options. Okay. So Dan, I'm gonna just like in the House or the Senate, right? I'm gonna yield back the balance of my time. I'm gonna borrow that 8 minutes for my next presentation at Winvesting. So Dan, thanks again for inviting me, my brother. Had a great time. You got a lot of great panelists the rest of the day, a lot of great traders, and I'm definitely going to be watching the replay. So Dan, thanks again, my brother, and I'll throw it back to you.